Good morning, everybody. Welcome back to the Everyday Growth Advisors live stream. I hope you guys are having a good morning. We are back here with another recap for the week. Interesting stuff going on with the market melting down. As we have been talking about on the live stream for a while, this wave down was expected, so it shouldn't be surprising you. Nominal corrective wave here from the uptrend that we have been talking about for a long time that has been overheated. On top of that, all the looking at bonds and all the different things that we've been following along for the past few months have been pretty much brooding up to this moment. And so now we'll see the irrational exuberance obviously turn the other way, where everybody starts to panic and everybody starts to sell. But this is exactly the time when you should be looking for opportunities within the market to pick up your favorite stocks at discounts as usual. Let's do the breakdown together. Let's have a look at what we can have a look at this week. It's a Friday. So happy Friday to all of you guys. And thank you so much for all the members who have decided to support this channel on a monthly basis. You can now support this channel if you wanted to. I know there were a couple of people who were asking me about this before. I fixed it, and so now you can support this channel directly by becoming a member of this channel. I've pinned the link in the chat box, and you will see it right on the top over there. If you want to support this channel, it's only going to be something like, I don't know, I made it a really cheap price, literally like $5 or something like that. So that, this channel gets a little bit of support and I can, continue to put out great content for you guys on a monthly basis. So I do appreciate you guys signing up and becoming members of this channel. It's just another way for me to bring more value to the YouTube channel, and I'm intending to do a lot more videos on YouTube this year so that we can increase the amount of content on our YouTube channel, since this is where everything started. The Everyday Growth Advisors started on YouTube. Well, actually started on WhatsApp, but then started eventually on YouTube, where I started putting out videos, and it's immense how much we have grown this year and the last year. So I want to say thank you to all of you guys, a very, very humble thank you for everybody who's been supporting this channel since day number one. If you have been here since day number one, thank you very much for sticking by me and sticking by everything that we do here. This will continue to be a free channel. Even if you don't decide to support the channel, we will continue to put out content for you guys. But if you want to support the channel, you want to be a member, you want to get access to emojis, and also now if you're a part of the Lion membership, I have introduced the perk of you getting ticker breakdowns first. So your ticker breakdowns will be prioritized if you are a Lion on the chat, and that way we'll be continuing on with the tradition of this being a hassle-free way of us doing breakdowns through these market conditions. Alrighty. Once again, just another reminder that Wave 16 of the beginner's course is still up for registration. If you want, you can go to learncompoundgrow.com. Let me just show you guys. If you go to learncompoundgrow.com and you click on courses, click on the beginner's course, you can join the beginner's course, which is the fundamentals of trading course, which will be going live on the 8th of March. Okay, so we have one more week of signups, and then the 8th of March, next Friday, we'll be closing signups, and then that Monday, more than likely we'll close signups on Friday, if not Saturday, and then on the 8th we'll be teaching classes from the 8 to 12. Also, stay tuned. More information about the technical analysis course is going to be released very soon now. And so we'll be getting that underway as well. So that one will be held sometime on the 22nd of March. And we'll have signups enrolling for that very, very soon as well. So stay tuned for that one. Been really busy, hard at work with creating that content for you guys. That will be something that we'll be doing next month. Okay, so stay tuned for more info about that one. Also, if you are not part of our Discord community, we just hit 15,000 on Instagram, and I might have a little bit of a surprise for you guys. So stay tuned about that announcement sometime today or tomorrow. We'll be doing a little bit of a thank you for everybody who has been supporting the Instagram and the YouTube channels for a while. Okay, so great. So what is going on with the markets, and what do you need to know today? What do you need to know is that what we have been watching for a long time has been slowly creeping up on us, and we've been watching that for a specific reason, because I've been talking about this for a very long time, that when the S&P 500 dividend yield goes below the bond yield, people dump stocks and take up bonds. But we're not seeing people take up bonds, okay? We're seeing people actually just dump stocks right now, okay? So how do I know people are not taking up bonds, specifically not buying up these bonds? Because the rates are still going up, okay? So, but what people are thinking about is, it's kind of setting off a cascading effect. It's a self-fulfilling prophecy where people are starting to think, oh, the rates are going up, so we should start selling equities off because people are going to start selling stocks off, okay? So that's the main focus on what everybody's talking about over here, okay? And that's the reason why the drop happened, or rather this drop happened, okay? That was the main focus there. Whatever else people tell you is probably just the news trying to scare you out of your position, but the main focus is that, you remember, we've been following the S&P 500 dividend yield, right? And I keep looking at these from time to time, and you guys must be thinking, why do I keep looking at these things, right? Why do I keep looking at the bond yields? Why do I keep looking at the S&P 500 yields? It's because when it is not attractive, if let's say, for example, all the top 500 stocks in the S&P 500, they're paying a dividend of 1.557%, but then the 10-year treasury, right? The 10-year treasury is paying a dividend yield of 1.55 or 1.56. That means that holding a 10-year treasury, which is a risk-free asset, this is riskless, doesn't have any risk, remember, okay? This, in finance, we call treasury bonds riskless assets because it's backed by the government, right? The government has to pay on these yields, okay? And who pays? It's the central bank, okay? And when this happens, people are going to dump the S&P 500. Why would they hold S&P 500 when they can pivot into bonds? That's the question here, okay? So, I mean, I obviously don't expect this to happen like right away, but we're seeing signs of this happening now, okay? And this is what is rousing investors to, dump these stocks, or institutions are starting to dump these positions. And they're saying, why should we take on additional risk in the S&P 500? Market's overextended. Market has been overextended if you look at the weekly chart, right? Why do we want to take on additional risk? Let's dump stocks for now, come back when, they're a little cheaper. And in the meantime, we'll rotate into bonds, okay? But we are not seeing the rotation yet. We're not seeing the rotation yet. So it can happen. It can happen. But we want to see the yields come down. So I think that we'll see yields go up a little further. Exuberance, remember, okay? There's that irrationality that pushes things further, right? Humans have that nature. It's oh, it's here. Oh, no, it can go higher. Oh, it's here. No, it can go higher. So, this little waves that are pushing up over here will definitely see additional to the upside, I feel, before we see actual drop happen on S&P 500. So for the time being, I say, this is a good spot to pick up a little bit of positions for the upside. Okay, I think this is a good spot to add long-term positions to the upside, and just kind of position yourself here for a little bit of a rebound to the upside. Okay. On top of that, the VIX also kind of spiked up over here to $27. Now, that is something that we were talking about. And the funny thing is, I mentioned this on the previous live stream, that the VIX has consistently done this, right? We spoke about this last live stream. Do you guys remember this? I said the VIX spikes up, sells off, and then moves up, right? And the same thing has been happening with the VIX for the past few times, right? It falls down, spikes up, and then moves up again. Falls down, moves up, and then spikes up again. Same thing happens over and over again, and this time around again happening the same way. Okay, so now whether the VIX goes up to 29, 30, 45, 55, that we don't have a crystal ball to tell those things, but what's important to know is that you have to keep track of what is going on with the VIX and what is going on with the indexes hand in hand. Okay, that is important. Okay, so let's have a look at the news real quick. What is the news trying to mislead us with today? What are they saying that will try to make us sell or try to make us, panic? Asia stock market plunges most in 11 months in a broad tech rout. Okay, this is good. I think it's time to, once this Asian tech slide kind of fall through, which by the way, KWeb fell all the way down to 87 now, right? This is a really nice price to buy KWeb again. Okay, and what is KWeb? This is your internet ETF, right? I've been talking about Chinese tech for a while, right? We've been talking about it. It went up, and then came back down now. It's coming down for a corrective wave, and then we want to see this move to the upside again, right? So what are we going to wait for? We're going to wait for this thing to bottom out and start making an uptrend again. Get that confirmation, ride this next wave to the upside, okay? And we'll know this happens. We will know this happens when we start to see overselling here. And I think today, when the market opens, is a good time to pick up calls on KWeb, not apeshit crazy calls. I'm saying pick up a starter position here. Starter position, okay? I'm going to tell you guys now. Remember, the date is 26th of February, okay? I'm telling you guys this is a good time to pick up Chinese stocks here. Emerging markets, riding this next bull wave to the upside, and KWeb will continue to rise because these companies are great companies that are fundamentally sound, okay? All up in this ETF put together for you, all right? So, good time to pick up a little bit of KWeb here. Remember, I did not say full allocation. I mean something like 1/4 of your allocation. 1/4, okay? Then if it goes further down, pick up another 1/4, right? If it goes further up, you can pick up another 1/4. If it goes further up, you can pick up the last 1/4, okay? And then when it starts to reverse, it starts to go to the upside now, then you start coming out of the position in tranches as well. You get rid of some over here, some over here, some over here. You get what I'm saying, right? You always scale in and you scale out. You never take all your positions at one time. That way you get a nice dollar cost average on these positions, okay? Great. So, many of you who have been attending the live stream would have benefited from this live stream. I think that, many of you who would have taken hedges and you would have been holding those hedges for a while, you would have definitely benefited, okay? Yeah, it took a little bit of time to pay, but it paid, okay? It paid in the end, which is what we want. We wanted that, okay? So, Okay. That's one thing about the news that they're talking about. India exits recession amid risk. Okay. Pineapples. Bitcoin headed to a worse weekly slide. Why am I not surprised? This is the time when you go back to your friends who have been posting on Instagram the hashtag buy crypto, buy this, buy that. Tell them, where are you buying? I hope you're buying, I remind them that this is the moment they should be buying more, I mean, I think they should all in their portfolio on crypto. This is the moment they should do it, I'm being sarcastic, by the way, being completely sarcastic. You shouldn't do that. You should never do that, okay? Okay, markets. Interesting. The stream is kind of lagging behind, I think. I feel like it is. Okay, never mind. Let's see. Good morning. What's up, Seabass? Kyle, Alec. Oh man, you even told me your name. It was Garrett. Was it Garrett? I think it was Garrett. Susie, Juliana, Landon, Santosh, Mark, Andrew, Darren, what up? David, Aaron, what's up? Nice to see you guys here. Thank you for hedge ideas. Close my SPY puts for profit. Awesome, David. That is great. Beautiful. Let's see. What time does the course start? The course starts at 9 p.m. Eastern time and roughly 2 to 3 hours. If you can't attend the whole thing, remember that you can always watch the recording the next day. I send out the recording like within a few hours after it's done. Okay. Good morning, Sably. What up? Okay. Remember, we're going to be voting on a new ticker for next week, so make sure that you guys put your tickers out there. Also, make sure you like and subscribe this live stream. I hope you guys can take a second out of your day. Smash the like button. That really helps me out a lot. If you can, I would truly appreciate it. Thank you. Okay, U.S. stock futures choppy after tech sell-off. That's what is the headlines on Wall Street Journal. Okay, here the main thing that they focus on is on track for its worst week in a month after bond yields rose sharply, damping appetite for technology shares and riskier assets. Okay, this is what they're focusing on. So Wall Street Journal actually got it right. Mortgage IPO boom veins. Okay. Usually Treasury, positive data jobs, GameStop, stocks, leap again. Charlie Munger. He's had a really few nice things to say about Robinhood and the rise of traders who don't know a thing about what they're doing. I think Munger went a bit too boomer, and then I think that Wall Street goes a bit too autist. So I think the in between there would be nice. You know, there's an in between there for sure. Okay, pre-market here. Mostly everything's flat except for some tech. You can see some tech got bought. Okay, pre-market. So Tesla, Amazon, Google, Facebook. Okay, Twitter, ServiceNow, Applied Materials, Nvidia. Some semiconductors getting bought up. Apple and Microsoft. Okay, these are the main ones that are getting bought up right now. Pre-market. Whether it stays like that, it's going to be a different thing altogether. All right, so remember that. And then let's see what else. Banks suffering a little bit of hit. Now I'm going to give you guys a little bit of a freebie here. I was thinking with the team yesterday to short JP Morgan. And I think I might end up taking a short in JP Morgan here. You know, just with this sell-off that's possibly going to continue. I think that banks are a little overextended, and I think that it's a good time to short banks. You know, they're reaching the top of their cycle. If you want to know how to know if banks are reaching the top of their cycle, just look at how their price over book ratio is doing. Okay. And so you can actually put it here. There you go. Okay. So every time that banks approach the top of the P to B, the price to book ratio, that's when, you know, it's effectively a good spot to start shorting banks. Okay, like here. Okay, here you can see this, right? And here, look at what's happening now. We're already at the top again. Okay, and each time do you realize there's been a huge drop, and now again we're reaching exuberant levels on the book ratio, price to book ratio, and this is another good time to start shorting banks again. Okay, so Bank of America is one of them, JP Morgan. Another one, right? All the banks will look about the same, okay? Look at this one, right? You can see this, right? You can see how we're creeping up to this level. So I think it's a good time to short banks here because they've had an insane run-up, right? If you look at the daily chart on JP Morgan here, doesn't this look unreal? I think this is a good spot to pick up some hedges. You know, out-the-money hedges here would pay good, but make sure you take them for a longer time frame, okay? So time to look at shorting banks outright here. If you want to play a safer route, you can sell calls. That's another way you could do it for people who think that banks are going to continue rallying. And then, yeah, so that's one of the ways that I would go about doing that. Okay, sell calls, or you could do even a bear put spread, or you could do a bear call spread, where you collect a credit. A bear put spread would be a debit. And those are the two methods that you can use. Shorting XLF might work also. Yes, more than likely. Actually, this doesn't have the price to book ratio. But yes, so shorting this would give the same effect, in my opinion. This is just a little diversified, so it takes into account everything else as well. So yeah, I think it's a good spot to short banks, in my opinion. Okay. Obviously, this is not financial advice. You know, it's just something that you can think about doing. Something that moves up that quickly and doesn't correct with the entire broader market. That should you know, signal some alarms for you guys. This is a sector that has been bought up aggressively on you know, the notion that economy is opening up. If any news comes out that there's a slowdown, then banks are going to fall. They're going to fall hard, okay? And so anything that will justify that. And then also, the you know, if the Fed keeps rates lower than anticipated, also falls. If interest rates go up even further, also falls. Everything will point to financials falling if the situation, like, there are too many things that can go wrong for financials right now. So based on probability and statistics, I would say it's a good spot to take some shorts on banks. Okay, and I was talking about this yesterday, but I didn't pull the trigger. Today, I will pull the trigger. I will pull the trigger on JP Morgan, more than likely. Okay, or Goldman Sachs, either one. Or I may just choose to do it on XLF, depending on how much it costs. Maybe some $29 puts for about 50 to 80 days out. So maybe, let's see, 26 to 26 to 30th. That's 60. I would say end of April. End of April options for XLF or whatever banking stock that you want to short. Go. That would be the right amount of time. Okay, so take a 2 months option. At least 2 months. At least, I would say end of April, or if you have the courage, I would say go a little further. Go a little further. Okay. All right, cool. Okay, so that's that. And then for miners and oil exploration, that's also going to undergo kind of a corrective wave down. I guarantee it. XOP is one that I was in. But this one's not getting hit too hard. Oil and gas exploration. This is the Spider series. Okay, so this one also should see a little bit of a corrective wave before moving to the upside. Be aware of that. Okay, be aware of that. Can we get everybody to take a second to smash the like button for these little things and little plays? Once again, for those people who just joined the channel, if you can take a second out of your day, hit the like button, just lightly tap it, the thumbs up. I would truly appreciate your help doing that. Also, if you want to support the channel, look on the chat. I have pinned a post, and I'll post it for you guys again here. If you want to support the channel by subscribing to our channel on YouTube, it's kind of like the same as like subscribing on Twitch. Similar thing, but YouTube takes a cut of the revenues, which... you know what, it is what it is. But if you want to support this channel, you can by clicking on that link and becoming a upgraded member, just like how a couple of our members have signed up already. And upgraded members will come with perks. So there are perks that you can get now. If you are a Lion member, you get prioritized ticker breakdowns and emojis and stuff like that. So we appreciate you guys becoming members, and thank you very much for your support. Thank you. Okay. Utilities also a sector that's kind of lagging behind, but I don't like taking defensive right now. Another thing that I want to look to rotate into very soon is consumer defensive. Okay, this is something that we can look into as well. Okay, pre-market movers. Etsy up 8%, Rocket up 9%. Zscaler 5%, Beyond 3%. These are pretty low volume though, so don't bother with these. The main ones you want to look at is Rocket and Beyond, and then Space got wrecked 11%. Vistra, whatever that is. The rest of them are insignificant, low volume selling, probably only sellers. Okay, interesting. On this side, we have news that just came out. What is this? Goods trades balance. Just whatever. Not that good, not that bad. Retail personal consumption, month-over-month, 2%. Retail inventories. Core PCE. Wholesale. Mercado Libre reports today. Okay. On the Dow Jones, we see Apple up about 1%. I want to purchase Apple, but still not at my really like beautiful price. I will take some Apple today though, just a little bit. I'll nibble on this one. I'll nibble a little bit of Apple shares today, and then if it goes down further, I'll add some more. So I'll nibble some Apple shares, and then I will nibble puts on XLF today, more than likely. That's the game plan for me. Apart from that, not really else to do apart from wait around and just chill. Twitter. Okay. Not much else here. Okay, so you know, as I was saying, continues on to have this trend here with the yields starting to go higher and higher. Now, you know, you don't really need to understand a lot of different things. Just know that, you know, if you were, excuse me, if you were holding the S&P 500 in your portfolio for a longer term, and I told you that the 10-year bond from the U.S. Treasury will pay you the same dividend, right? You would probably forego your S&P 500 and buy the dividend from the Treasury bond. So that's the reason why people are looking at Treasury yields right now instead of bonds, because these represent the coupon payments, okay? And so that's the reason why the market's throwing a fit. I do look at this as an opportunity, though, for buying. And so, yeah. Facebook's Mark Zuckerberg continues to sell his shares, and the same number always. He has liquidated almost, I want to say, close to easily, you know, I don't know, man, like a lot. Look at the amount of shares he's liquidated. Just this month, okay? 11, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17. Jeez. Seriously, a lot of money. Like he's I don't know what he's liquidating all this for, but he's selling a lot of his shares. A lot of them. And it's been happening ever since the start of this year. He's been doing it, like, aggressively. I don't know if it's part of his pay package. It might be. But I need to look into this more. He gets paid $11 million every few days. It's kind of nuts. Okay, it wasn't... Look, it wasn't... Oh, even last year. Last year he was... Oh, wow, even more aggressively, I guess. Let's see. Yeah, even more. Last year he was selling even more aggressively. Okay, it has to be part of his pay package, I think. But what kind of a CEO gets paid $11 million every few days? It's Mark Zuckerberg. This was what, 24th, 23rd, 23rd, another one on the 23rd, then a smaller tranche on the same day, on the 22nd. Every single day. Do you realize this? Almost every single day. 18, 17. This is like 12 million, 12 million, 11 million. This guy is like cashing out every single day. It's dope. Beautiful life. It's a beautiful, beautiful life. I'm trying to have that kind of a cash out. Where's my cash, bro? Ask Zuckerberg to throw some of that over here so that we can put it into the portfolio, the ARK fund. I bet he's putting it into the ARK fund. Okay, Moderna director sold 6% of his shares. This guy, what is it? Charles Schwab sold not a lot, like $1 million worth. EVP. Director. Okay. Moderna. PayPal. EVP. Okay, nothing really that interesting. Only Zuckerberg selling his shares like almost every other day has been interesting. But I'm gonna find out why. I think it must be part of his pay structure. I'm pretty sure. Okay, great. Let's do the SPY NASDAQ technical breakdown real quick. So looking back on this on the 1 hour. Let's do the 1 hour first. You know, we had some forecasts here. Let's go ahead and see exactly where this can actually lead. Okay. If the sell-off gets uglier than where we are right now, which means to say that if for some reason we break this level right here again, Then we're heading down into this region right here, 372 to 376 on SPY. Okay, this is the next target right here. I'm going to leave this here just in case we get there. Okay, this would be the next region because this is the next support zone, which we came down to in February. Okay, that was a flash crash, and now it looks like it wants to do the same thing. There is also a gap over here that has not been filled. Do you guys see this? And I think that there's a possibility that we see the further fall to close this freaking gap to the 23.6. That's what I'm thinking. Okay. Now there's also kind of a head and shoulders pattern forming, I believe, on the QQQ. So you can kind of see it, but not really. Okay, it's not a perfect head and shoulders, but it is there if it forms. So let me kind of show you guys what I'm looking at. Left shoulder. Head. And you see this? If this comes up back here, then you'll get the right shoulder. This is what I think may happen. There's a possibility. But then if we break below this, then hallelujah, hallelujah, right? Because this would be the neckline. And then we'd fall all the way. Okay, this can be a possibility. But the problem with this is, if we were to take that into account, then it probably wouldn't be a proper wave, because the wave 3 would be the shortest wave, and that would debunk Elliott wave theory. So I'm not really sure if that will happen. But what I do like is, if today was an extremely green day, then I would like to take some puts. What I do see happening for a while is maybe us going like trading sideways for a bit, before the market decides what it wants to do, and then rates stabilize and blah, 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 that happens. That's a possibility of what I want to see. Okay. So from my perspective, just looking at this, once again, if you take this from the upside here, and you use this previous point here, then, our target for QQQ is going to be actually in the 300s here. Okay, this would be the target for QQQ in this region, which would be a nominal pullback before the next wave up. Okay, so I'm gonna leave all of this here just so we have it. Okay, and see if this happens. I don't know if it will. And then the Dow still has a lot of room to come down. Actually, the Dow has a lot of room, and the Dow is actually up pre-market, is it? No, not really. The Dow still has quite a fair bit of room to come down here. So I think, if you wanted to short something on this market downturn, the strength is obviously in the Dow, but people are selling tech off. So I would say, the rotation out of this would be from Dow into tech. So what you'll see in the next coming weeks is going to be people will start to sell Dow, and then you'll see NASDAQ getting bought up. That's what you'll see, the reverse of what's happening in a couple of weeks from now. So that's the reason why I say position yourself by picking up great companies right now. Don't take them all, don't take your full positions, but nibble at positions right now. Like, for example, your Amazon, your Facebook, your Microsoft, right? Undervalued positions in Baba, right? What else? Your AMD, right? What else? Boeing is going through a very turbulent time. I would say, even taking Boeing is not a bad idea, but just don't take too much of it, right? Baidu, right? Baidu got sold off, murdered, right? Baba, this one, JD, this is gonna. But if you don't want to do individually the Chinese stocks, what you can do, I already told you, take KWeb. This is a good time to add KWeb. It's coming back to the 50 moving average. it's a great time to add it. Okay, it's a great time to add KWAB here. I'm telling you guys right now. Remember, it's the 26th of February. I'm mentioning this to you guys because I think that you should take them. Okay, so I'm gonna write it down so that I don't forget this myself on the Discord of what are the positions that I want to take today. So KWAB, bangs puts, and then calls on shares, Apple shares. KWAB calls. There we go. Yeah. Okay. This is what I want to take for today. Those will be the positions that I'll be rotating into. Okay. Cool. So I'm giving you guys, you know, my perspective here. Obviously, not a, you know, this is not mumbo jumbo or nothing hocus pocus. It's just basic stuff. Okay, you should be knowing this stuff. Ooh, CCIV up after hours. Nice. Okay, didn't see that. This is good. I like that. I like seeing this. I have sold puts on this one on 95 strike, and I collected $53 in premium for those. I'm hoping for an IV crush on those contracts for the shares to pop up here, and we'll see how far it can go. I'm not going to keep my hopes too high on this one, but I just do want those contracts to crush though, so we'll see. Oh yes. Oh yes, oh yes, oh yes. XLI, right? Industrials. This is another good one to add today, guys. XLI. Now, the reason for this one, I've been talking about it on the Discord channel for a while with the team live, is remember that there is a huge stimulus plan coming. Okay, so the House is on the verge of approving it, a $1.9 trillion COVID aid plan. Okay, and part of this plan has also infrastructure spending built into it. Now, companies that are part of infrastructure spending are going to all be part of industrials. All right, your Caterpillar, your whatnot else, companies that form industrials are going to benefit from the infrastructure spending. Okay, that's the reason why if you look at Caterpillar, it's been on a rip, right? This is another one that if you want to take a short on, this is a perfect time to take a short on Caterpillar. I'm giving you guys another freebie here. Okay, short on Caterpillar. Short Caterpillar. For the time being, play this to the downside. Look at how overextended it is on the 1 hour. Can you see this monster rally? Taking this to the downside for now is a good play as we see the rotation back from the Dow Jones falling down and then NASDAQ going up. So this would be the one to short for the time being and then play the rally in tech. Okay, I'm not talking about this right now, guys. I'm talking about this rotation ideas for the next 2 weeks. All right, I'm talking about next 2 weeks. We pretty much called, you know, the timing on this one pretty well. Like I did mention sometime mid-February to end of February, you know, we will have the correction, and we indeed came to have this correction on 26th of February, which is perfect. And now I think, you know, by April we'll more than likely see the NASDAQ back to all-time high somewhere there. If not, if we see you know, the bond situation continue to unfold as being weaker, then we'll see greater problems with all across everything, right? But for now, that's what we're focusing on. Okay, everybody in the chat very quiet today. Hi guys, you there? How are you guys doing? What's up? Nobody's talking. CVS is a new ticker of the week. That one actually sounds really good. Somebody mentioned it last week. Takeda is also nice. I see a lot of people calling for CVS though. Can we agree for CVS next week? It'll make it really easy if everybody agrees right here for CVS. I like that stock to cover it for ticker of the week next week. So CVS has been in a very nice little formation here. You can see this. And I think it's a really nice time to add upside position on CVS here, to be honest. Really beautiful. Let's see. I'm going to do the last ARK fund today, which is ARKF. This is the FinTech Innovation ETF. I'll be doing this one last today. And then we're done with all the ARK funds. Let's see, new ticker CVS, okay, CVS, DraftKings, pop. Yeah, DraftKings was a good one as well. We did DraftKings already though, right? I'm at work watching and listening. Okay, cool. T, out of all the ARK funds, which one would you pick? I want to add some shares to my IRA. I was thinking about fintech, but I want to hear your opinion first. If you want the balanced approach, like not go apeshit crazy all on one thing, I'd go for the ARKK, which is the most balanced one in my opinion. But do remember that that one has the most allocation towards Tesla. It's almost 10% of the fund. If you're okay with owning Tesla, then sure, go for ARKK right now. That's what I would do. Today is a good time to add it too. Pulling back to the 200 EMA looks like a good time to add to this. However, I did read something about the ARK fund having liquidity issues. Now, I don't know how true it is, but I mean, I trust that Kathy Woods would know what she's doing. PLTR and the psychology of owners selling off earlier this week. Okay, just making some breakfast, soaking up the knowledge. Cool, Kyle. Awesome. Would like to see Exxon, but I'm down for whatever CVS works. Okay. Can we get a definitive agreement that we want to do CVS next week? Is everybody cool with CVS? I think it's a good one to cover, especially since it's doing vaccines, blah blah blah, sitting on a nice little channel here, the bottom of a channel. I think this we could play this to the upside. If you guys know, there has been always an inside joke on the live stream that every time we choose a ticker on the Friday, you should just go ahead and take call options, because for some reason on the Monday when we want to cover the option, it always ends up buying up. So if you wanted to play CVS out, and you want to do the tradition of the live stream, just go ahead and take calls right now. Okay, I see a lot of CVS, so we're gonna do CVS. Perfect. We'll do CVS for next week. Should be a good one. Actually, let me go ahead and do the chart right now so that we can get it out of the way for you guys. Okay. So nice little thingy here. Actually, hold up. That can remain. Yeah, this is a demand zone right here. And the supply zone is going to be a little further down here. It's that dual zone right there. It's looking great to the upside. Let's see. Okay. Perfect. We can see 76 is where our target would be, pretty much all in here. This would take at least 2 to 3 weeks though. This is a swing trade. This is going to be a swing trade idea. And it's going to take a while to get there sometimes. But then again, it does rally pretty quickly. Literally within a week gets there. So this one will take a month to form the idea, but I'd say get options for 50 to 80 days out. Same thing, 50, 80 days out. You want April options for this one. April, 70, 72, 70, like that kind of call. Don't do the 76s. You want to take advantage of that gamma too. So I'd say 72 calls for April 16th or something like that would make a great little play here. Let's see. Get rid of OBV real quick. And maybe get rid of the this thing. Do we really need the moving averages? No volumes. None of that. And maybe we just need moving averages. Yeah, that sounds good. All right, cool. I like that. I'll use that chart. I'm saying April strike, I would go like 72 if there is such a thing. Let's see. Let's see here. April 16th makes sense. Yeah, April 16th, 75. So the 7250 calls look good. They look good. They're pretty cheap too. 187, 165 is the spread. Not too bad. Less than $100 you can do this one. I'd say it's a good idea. I'll note it down on the Discord real quick so that we can keep track of it. April 16th, 7250 calls. Okay, great. Let me complete the ARK fund real quick. Okay, so ARKF, this is the last one that we need to cover for this week's live stream session. Once again, we covered all of the ARK funds this time around. This fund itself is for the fintech sector, okay? Mainly focusing on transactional innovations, blockchain technology, risk transformation, frictionless funding platforms, customer-facing platforms, and new intermediaries, okay? This fund has a return of a 1-year return of 100%, and since inception, it's up 62%, okay? The top holdings are Square, Mercado Libre, Zillow, Intercontinental, Tencent, Pinterest, whatever this is, Adian, I've never heard of that before, PayPal, C, and Alibaba, okay? And I think if you are, interested in just, these specific group of companies that are for fintech, these are the ones you can go for. I would say do this ARK fund. Remember, the expense ratio of this fund is still the same. It's, I believe, 0.75%. Yeah, 0.75%, which is, in my opinion, it's quite a fair bit. Okay. But remember, it's an actively managed fund. Okay. All right. So, here are some of the top holdings. Let's have a look at them. Square is the biggest one. This is 9% almost. PayPal, Zillow, Pinterest, Intercontinental, Tencent. C is another one that we like. C, S-E. Really moved down nicely to the 230 something level here. Nice uptrend, very strong uptrend. The surprising thing is this stock hasn't really sold off abruptly yet, which is extraordinary. This one I think is Singapore based too. It's interesting. And then Shopify, all of these making transactions easier to do. Personally, if you ask me, I like this fund a lot. If you ask me, this one would be ranked number 3 on all the funds. Okay, on all the funds, this would be ranked number 3. If I were to rank these funds, I'll rank them like this. Okay, this would be number 1. Why? Because it has a more diversified approach. Then second after this, I would go next gen internet ETF. That's the second one I would do. Then I would go more than likely the fintech, and then I would go genomic revolution, and the last one I would go is the technology robotics ETF. That's the way I would rank these, because I like these secular trends the most in general. Okay, and then fintech is one of my favorite ones as well. So that, like, 1, 2, 3 hands down, it's locked in. 4 or 5, interchange them however you want. But genomic, remember, the genomic one has the highest return and the highest risk. This one has the highest return and the highest risk. So a summary of them would be like this. This, in my opinion, this is the best one because it's the most diversified. Then the next gen internet ETF, because that's pretty much the ARK fund but a little more lightweight. Then fintech right after that, because of how these companies will be pushing secular trends for a while. Then you choose whatever you want. You want technology and robotics, or you want genomic revolution. Personally, I would go 50-50 on these two, split it out. If I were to do allocation, let's say I was doing an allocation of, like, I don't know, 50 grand, I would split it like in an allocation of such, like, this would be, make up like maybe about 30%, right? And then this would make up about 30%, right? This would make up about 30%. And then these two would make up 5% each. Split it all across like that to 100%. That's the way I would do it. And then you have like a diversified return out of all of these, and you're covering multiple different tickers in the same one too. Like ARKK has a lot of Tesla, right? But then so does the other one. This one, Tesla also, right? And then the next generation internet ETF, this one has a lot of Tesla as well. So you're kind of like diversified across, okay? That's the idea. And then cost average basis too. Okay, that kind of wraps up the ARK funds. Let me answer the rest of these questions here right before I have to leave here. So, Adobe 500 calls, your expiry is too short. Guys, if you're taking expiries that are 1 month out right now, excuse me, for a swing trade, it's too short. Okay, it's too short. With market conditions like this, you have to go for their expiries. I'm just saying, buy yourself more time. Don't put yourself in a position where the market's going to have a meltdown and then you lose all your money on those options. Okay. What do you think about 416 SPY, 425 calls? 425 strike is too far. 400 is still okay. Nvidia 570s, nope. I wouldn't do it. I mean, like, if you want to, go ahead, but I'm telling you, high risk, very high risk. You're taking a super high risk. Like, I wouldn't play anything with short expiries right now. I just wouldn't do it, okay? I wouldn't do it. Anything right now has to be a swing. It has to be a swing or you're buying shares. If you're going to take short expiries, you are taking a high risk maneuver, okay? Nvidia 570, 312. Well, as I said, once again, somebody's asking for the second time. Nope, I wouldn't do it. Okay. Worth buying Amazon calls for next week? Absolutely not. Do not do that. As I said, don't just take things because you see the opportunity is there for the upside. Don't be greedy. You want to get something, grab it for a real reason. Don't, like, what if Amazon continues falling here? What are you going to do then? You know what I mean? Then there goes your options, right? Okay. Home Depot 275 calls for May. Sure, that's a good one. Yes, hold that one. That's more than 50, 60 days out. That's a good trade. Yes. Workhorse, $60 call. Bruh, you $60 call for next year, Thiago. I don't even know what's going to happen to this stock in this year. I don't even know what the intrinsic value of the stock is. If you're taking a leap on this, then I'm guessing that you know what the stock is worth. For me, if you're saying January 2022, I have no idea where the stock will be then. And for a leap, personally, there is no technical analysis to be done on that. You know what I mean? If you're asking me what's going to happen to this stock in a year from now, I have absolutely no idea, sir. Absolutely no idea. Okay? And also on top of that, you wouldn't use technical analysis to find that answer. Like, how do you want me to use technical analysis to find an answer? More than likely, what you should be doing is going to find out what is the intrinsic value of the stock so that you can make the decision. Okay? So that's my reply to the workhorse ticker. Break even is $25 currently for what I sold. For what? For what you sold? What did you sell? I'm confused. How about Fubo 41 calls 416? Okay, this is the last ticker I'm doing. After that, I'm gonna get off here, guys, because I gotta get on a call with the team for the live trading session. 41 calls 416 seems okay. Might be possible. Might be possible, but I wouldn't hold my breath on it. That's all I'm gonna say. Might be possible, yeah. Might be possible for a bounce up to this channel here. I would say so, yeah. But once again, I think it's risky. I think you should wait. You should wait for this to reverse. It's still falling here. It could still free fall. Be careful, man. I'm just saying, you really be careful, okay? Anyhow, I want to say thank you guys for attending the stream. Have a great weekend, guys. Discord team, I'll see you guys there in a second. And if you haven't still considered becoming a member of our Discord community where you can trade with me live every single day, go to learncompoundgrow.com. That's where we interact with every day on a daily basis. You can also get one-on-one coaching with me on the Discord, which people are really doing recently, and I'm really loving it. I'm really starting to realize that one-on-one coaching is what I really want to focus on, by the way, guys. I think it's really fulfilling for me personally, and I think it's very helpful for the people who I coach. So I'm finding that those are greater results, and I think that the people are finding those to be even better than anything that I'm doing. So I'm gonna probably end up focusing on that a little bit as well, so that I can give you guys more of my one-on-one time. And I think, you know, majority of you guys have one problem. It's a psychology. That's the main problem. And so fixing the psychology fixes everything else. So if you want to, you know, get that one-on-ones set up with me, reach out to me. I'll see what I can do. Set some time apart, and you know, help you with that. Okay. In the meantime, guys, if you can do me a favor and go ahead and smash the like button, I really appreciate that. Also, comment on the video and the previous videos if you can. I would really appreciate it. You know, have a great day, great weekend. I'll see you guys on Monday. We'll do CVS next week. And hopefully this market meltdown doesn't catch you. Make sure you don't go crazy on calls. Take some starter positions, as I just mentioned. The market can easily drop further. Okay? Be careful. Stay safe. Love you all. Peace out. Take care. Bye-bye.